looking at my portfolio, this sector E and F become the best, and because of which I look at best stocks which I have in my portfolio. Oh, I have stock E. Oh, I have stock F, and they are the best. So that means this is the time I should stop loving them and I should sell them, because they are not going to remain there. So this is the whole idea of stock picking that I can do from ranking, and I can reduce the stock, and I can see yearly performance, and I can start building an investment portfolio from this thing. So General Electric can be the worst on a holding period of 3 days, and General Electric can be the best in a holding period of 3 weeks. It depends on what holding period I'm looking. If I am a short-term portfolio, I'm doing calls, puts, and futures. This is the time for me to be looking at buying a call or buying a future on GE. But if I'm having a portfolio which is I'm holding for 3 weeks or a month and GE is the best, that's the time for me to reduce or sell GE or take it out of my portfolio. So the whole idea is that I have to buy and hold the worst. And when I say worst, I'm not saying just buy the blue line. I'm talking about buying somewhere in the last 10 or somewhere in the last 10%, somewhere in the last 5%. I'm not talking about just one stock to buy. You know, you are looking at a few stocks. You are not looking at one stock, and you never know that the brown one, which is not the worst, might already have been the worst, and it is starting to already go up. So you don't want to miss out on the brown one, or you don't want to miss on American Express the green one from the bottom third. So you have to look at a group of assets, and you have to see which ones to sell and reduce, which ones to buy and hold. So this similar thing that you can do with your own portfolio. You have a portfolio, you have many stocks, A, B, C, D, E, F, G, and you want to understand that which are the ones are the best and which are the worst. So you put the stocks in a larger group of stocks, and you say, A is the best stock, and this means that I should not be holding A. G is the worst stock. F and E are also the worst. So this I have less. I am only Chinchla Sutta. I should double my quantities. So this simple ranking process can open up an opportunity for you to not invest in the best at the top and the peak, and be aware that these are the ones which you have to reduce. So you can also rank your portfolio. I have a portfolio, my portfolio value is X%. If I'm going to put my X% with what is the portfolio value of that, Y%, what is the portfolio value of say 5, A% gold is G%, Auto Day something else, Dow something else. And if I put them on a ranking, if my portfolio is the best, I should not get excited, because this is the time I have to reallocate my portfolio, because my portfolio is the best. If my portfolio is the best, I should stop feeling like a genius, and I understand that if it is the best, then there is something I have to do to not be here, because this is the time for me to reallocate. So simple idea, which of course not very tough to grasp, but it still needs a conceptual understanding. It still needs a belief that yes, I have to go and check it back whether the curves come like this as he's saying, and plus from the risk point of view, if there are 6 stocks, the ranking is there, but when there are 500 stocks, you are reducing your risk by being in the number 499, 498, 500, 482. But if you are doing a small group of stocks and you are buying the number 5 and number 6 and selling the number 1 and number 2, your choices are less, and so therefore your risk is also a bit more. So you need to increase your coverage, where you have to look at many stocks, and that is why Alpha Round we have done to 54 assets, which include regional indices and regional stock markets. We are trying to scale it up to 100 and more, so that there is, where does SIP5 stand. If SIP5 is number 19, number 2 in a group of 100 stocks, I will sell it. If SIP5 is number 99 or 98 in 100 stocks, I will buy it. Of course, I will look at other things and I'll look at technical, but this is a system which filters to me and tells me what is the best and what is the worst. Where is the 20% action going to happen? And I want to be in that 20%. I don't want to be in everywhere else. I don't want to do 50 portfolio stocks, 30 portfolio stocks, 10 portfolio stocks. I want to do investment in what moves. I'm not in love with anything else. I'm in love with performance. And this is what performance cycle helps you to understand. So forecasting can be done. This is a global portfolio which was done for 54 assets. Now we have moved to 500 assets. We are tracking Alpha Global 500 assets. Metals, energy, agro, bonds, and the S&P 500 stocks, global indices, 500 stocks, 500 assets. And now we are building systems also where we can give you access online, where we might increase by the end of the year to 1,000 assets. So 1,000 assets is something is number one, I'm going to sell it. And if it is not number 1,000, I'm going to buy it because I think it's a large group which reduces my risk. So this is how much I believe in performance being cyclical, and the best of being a sell or a reduce, and the buy being a hold, the worst being a hold or a buy. So this is what was wheat and sugar at the top, natural gases was at the bottom, and these are the forex currencies, Australian dollar at the top, and then we have done sectorally also, we have done totally sectorally. So I can see a sectoral picture that, for example, tin and nickel are the best, and gold and platinum are the worst. So if you look now at tin and nickel fell more than gold and silver. Of course, gold has started to move down, and this is an older update. But you can see this easily. You can relate to it. It is very intuitive. It is not very tough to understand, to grasp. It is tough to believe in it. But if this can help you filter your signals or can be a decision support system, you definitely are not going to buy or sell at the wrong time. You have a higher chance of buying and selling at the right time. And this is how these are the local markets, and we have seen that how SIPFI moved from number 3 ranking, lower on 22nd ranking. Here it was on 22nd on June 2010, and this is SIPFI, and it moved to number 3 ranking on July 2010. So there is already a shift of rankings that we have shown here. Outperformance and underperformance, this is built on performance. So if the stock is going to go up, it is outperforming, it is going up, it is doing better than the rest of the stocks. If it is falling, then in that case it is underperforming, or it is doing worse than the rest of the stocks. So this you can know for indices. You can know Brazil is the best now. It became the top, and after it became the top, it starts to fall. When it is, say, for example, Dow 30 is here, it moved up. After it moved up, it starts to fall. So you can already start seeing the cycle, when it moved from down to up, and then it started to go down. So the cycles, Reiki, is built on rankings, and this is also can be used for forecasting. If sugar is the best and nat gas is the worst, I am not going to invest in agro. I am going to invest in energy. If pharma is the best and utilities is the worst, I am not going to invest in pharma. I am going to invest in utilities, and I am going to sell my Autobay and Bio or reduce them, and I am going to buy more of Transelectrica and Transgas. If I have Dow as the best and S&P 500 as the worst, then I understand that bigger bull market is still in place, because S&P Chin Sute outperforming is positive for the market, because Chin Sute action going up and Trezit action not going as much up as 500 doesn't worry me. If 500 stocks are going up, this is a bull market. So I can understand forecasting perspective also with these issues. And I can obviously understand sectoral view, when to be in financials, when to be in utilities, when to be in euro, when to be in dollar, when to be in euro RON. Whether I should, if it is Ron the best or Ron the worst? If you guys, if one of you, some of you were there at the conference at Sabex, at Paltanish, I made a case of golden lay, and I said that this is the best time to be in lay because according to the ranking, lay is going to strengthen. Now this is a case I made at Paltanish, and so the idea is that ranking is an amazing forecasting tool, because it is just telling you to buy when something is the worst. And it's just telling you to sell something that is the best. And and I'm again mentioning that this is a decision support system. If you have to start trading, you have to understand the system more. You have to see how we are combining it with various things. Now, I think that this is also some 2-3 weeks back ranking. SIF 2 was the best. SIF 5 was December was the second best, and they were sell. And SIF 4 and Arthur Bay were at the bottom. And so these are the stocks that one has to see whether in the last few weeks SIF 4 or TerraPlast or Arthur Bay or Krumpa has really fallen as much as SIF 5 December and SIF 2. Now this is a case which I carried yesterday in alpha.rom, and where we showed that May 2010 SIF 5, the SIF 5 and SIF 5 December were at ranking 9-11. They were one of the best. Because if something comes in 9 or 10 among 54 stocks, this is the 54 stocks I'm talking about, 54 assets. So this is our latest ranking, carried 2 days back, I think on Thursday. And this was on November Donizeche, SIF 5 and SIF 5 December fell in ranking to the stay ranking, and SIF 5 December fell to Tereshase. So SIF 5 has already dramatically dropped in rankings, and it is falling faster than SIF 5. And this again gives you an understanding how the future is going to look like. If SIF 5 and SIF 5 December comes below Patrick's age to say Ching's age, I'm not going to sell it anymore. So I am already understanding the cyclicality of performance, and this is the right on the side of the chart. The black one is SIF 5 December, the red one is SIF 5, the black one is SIF 5 December, the red one is SIF 5 spot, and you see in that time of May 2010 to November 2010 how did prices move. Now the signals we generate. You know, hello, are you there? Anybody? Can you all hear me? Yes, okay. So, so this is this is the radar structure. This is another way of looking at rankings, and this is a circular way of doing things. And this is now what we did was, okay, we said we have an anticipatory system. It tells us when SIF 5 is going to underperform, when TerraPlus is going to outperform, and etc. But that is still a cycle. It's a seasonality. It's an anticipation. The worst is going to become better. It is an anticipation. The best is going to become start underperforming is anticipation. So anticipation system is what is Reiki. So we said to reduce the risk or make it more of a trading strategy or understand